Good morning, master traders. Greg here. Let's take a look at the broader markets. We have some stocks here that I'll say they better rebound in short order here, like after the gap down or stabilize. We may see this sector that's led in a lot over the past year see some big move to the downside. We'll take a look at that. So S&P's here, just pulling back here a little bit. We've got minor support, major support down here. In reality, with this resting period that happened through August and the beginning of September, and then the move up to new highs, this pattern, if staying bullish, it should not pull back much more than what it did on Friday. Excuse me. It tried to move up here this morning, and it's pulled back. You can see the topping tail. It's pre-market. Doesn't mean it's going to close this way, so we'll see. But within this area, you see this consolidation here. It should hold right through here and then push higher. Now, if it doesn't and it pulls back to here, well, then we have to question this breakout here, whether it's going to fail. So just looking at, if you look at retracements, I'm not talking about the Fibonacci kind. I'm talking about common sense. If a move starts here and goes here, the further it pulls back to where it started, the more bearish it is. We don't need lines, with a fib tool to tell us that, and we don't need that to tell us where prices may reverse. We simply look to the left and say what was resistance should become support, so on and so forth. Keep it simple. Okay, the Nasdaq, right, that's getting a little bit more damaged here. It showed relative weakness last week, and we'll have to see if it can get through this area here. We've got support down here, this bottoming tail bar right here, and below that it just opens up into this little mini void right here down to this next level. And just like I said in the S&Ps, you start here, you go here. The further you pull back to where you started, the more bearish it is. Okay, I want you to keep an eye on bonds, even if you don't trade them, or you could use TLT. Because you see the stabilization here at this support. Now, financials did well last week. Let's take a look at those. And you can see there's an inverse relationship here between bond prices and financial stocks. So if you look at Citigroup and JP Morgan and and such, you'll see that they performed well last week. Now, what to keep an eye on here? Well, you see bonds went down, financials went up. Now, this begins to rebound from here, and you can see the stabilization. Those financial stocks are going to come down. So keep that in mind. Now, on the other hand, if this breaks lower, and let's go to TLT for some of you that don't have bonds, you could use TLT and just set an alert here. So if this starts to break lower, those stocks are going to go higher, and you can potentially profit from the moves in those stocks. So there's an inverse relationship, some intermarket analysis to help you there. Oil continues to move up. It's gotten through this resistance area now. Here's the next level, where it may stall. And there's another level here, but you can see the recovery here. We can look at the weekly chart, which is still in a big trading range. However, it's now approaching this major resistance area. Look at the depth of retracement here. So the same concept in reverse. It made a high here. It made a low here. The deeper it moves into that prior area, the more bullish. And when you see that, just as a general rule, if it goes up 80% or so, you might want to consider buying the pullback if it does that. And so as it's trending down, here was a major support level, retraces 80%, consider buying the pullback. And of course, if it retraces 100%, you consider buying the pullback. All right, those stocks that better rebound because they're getting a bit of a hit here this morning. All right, so if you remember in a video, not last week, maybe the week before, I told you to look for the potential or possibly a pattern that would set up a breakout bar failure. And Amazon looked just like this because the majorities were looking for Amazon to pop higher. And I don't think that that was a wrong assumption just based on the breakdown failure, the consolidation, and the wide bar. But you always have a second scenario. And my second scenario in a situation like this is if it forms an inside bar, which is okay, it's a resting day, and it doesn't pop up, rather than popping up, it breaks the low of the inside day, step aside on the position. That's a breakout bar failure. Now you see where Amazon is, and right now it's trading at about, well, 945 we could see here. It's just dropping down. So when it gets to this area here, this might actually be a gap down that gets bought, especially if it may go a little further into this area. You may watch it at 10 o'clock. That's a reversal period. 10:30 is another. It's been falling for multiple days now, and now it's gapping down, which we would call this a novice type of gap. It doesn't mean it can't go a bit lower, but down in here might be a place where it's going to pop back up again. So you could be watching this on a 2-minute chart or 5-minute chart and looking for some stabilization in this area, and you could get a day trade out of it. Apple is gapping down. It's been coming down several days. You got a support area down in here, 148, 150. It's trading 149, right, 96. So it's coming into this area. That may gap and turn as well. Google is gapping down a bit. It's pretty far from its support area, so it's just chopping around here still, but worth keeping an eye on. Facebook is down about $1, a little over $1 here. So it's trending down. So all of these FANG stocks are under pressure here today. And if they don't rebound, well, you have to believe or, consider that the Nasdaq 100 is going to break through this support, 143.73. It's already below it, right? But it could just pop right back up again. So we've got some things to keep an eye on as to, this market holding up on the bullish case. Last week, transports had a great week, now coming up into resistance. And the Russell had a great week. It popped above to new all-time highs, and that's coming in a little bit here. And here pre-market, you actually got retail stocks actually showing a little bit of relative strength here. So maybe some buying going to come into the beaten down sector. For holidays are coming. One that we're going to keep an eye on here today for a possible play. I know it's below the 200, but it's showing some strength here. Pre-market and gapping above this little congestion area is Ross Stores. Okay. All right, everyone. Have a great trading day. Have a great week, and we'll talk soon.